Hello, West Pacific Market Analytics, and it's Glenn here with your West Pacific week on Father's Day. First of all, have not been around as you've seen for the past few weeks and did not get a month ender done as well, as I have just been taking a vacation. I was taking some time off and getting things done, first of all, and second of all, I've just been really focused over on our member Discord site and really working hard on a lot of the data for my members, and we've been discussing so much over there that's really just taken away a lot of my time. It's not that I've forgotten about my YouTube channel. I plan on continuing forward here, but really into all this, there just hasn't been that much to discuss. And I'm coming back at you just to give you a really quick update of something very significant that has occurred here in the past few weeks. And this is very, very important because I'm not going to get into it here on the video. I've been talking to my members about it, but you have to understand what the real reason is for this attack on Iran. You cannot believe any of the stories you're hearing. This has nothing to do with the threat that Iran posed as far as their nuclear deterrent. That's been a storyline we've been hearing for a decade now. Right? They're weeks away from having a bomb. How long have we heard that? So understand that this is something so much more significant and so much larger that I do not even want to go into it here in this video. It's simply too dangerous to discuss. But just trust me, this was planned long ago, as are many of the events that occur and that are used to manipulate and control this world. Now let's get into the data. Let's not waste a lot of time here. Happy Father's Day to all your fathers out there. Most likely going to get back to a regular schedule here starting in next weekend and getting a month end at the close of this month because it's going to be important. We'll get back on track with that. Let me put out the disclaimer. Again, West Pacific Market Analytics, we're here for entertainment purposes only. Please always do your own homework and understand the substantial risk involved today in these absolutely crazy times. I think it's more crazy now than I've ever seen it in my entire lifetime. Now let's just jump into it here, right here. Let's go into some of this. And what's interesting is, before we look at this, we're going to go off some of the models I've been sharing here on the Discord platform. And again, let me get a plug. If you want information on joining my Discord platform, get a hold of me here at destinytrading@gmail.com, and I'll send you out some information. We are definitely looking at a ton of different trading options. We're looking at much going forward here and looking at the risk reward with a lot of this data. Now let's go here. First of all, I found this on Twitter and I found this really interesting. This came out from Crescat Capital. And you notice now that the energy sector in the S&P 500 is less than 3%. So all this talk of how energy is going to drive the market here is not going to have any effect on it whatsoever. Notice here back in 1980, the late 70s and 80, remember when we had the energy crisis? No wonder we were panicking. Look at that, 25, 28, 30% of the S&P was made up of energy-based companies, and now we're at historic lows at 3%. So energy is going to have nothing to do with what's ahead, and that's what we're going to look at here, because what is going to drive this beast actually is going to be finance. And we're going to finish off the report looking at the reasons for that. Now let's just go into a few things here. First of all, here's our pattern top model. You notice now that we have reached this point in time here back in 2020, 21, 22, 23. You notice here our pattern in red topping out right on the dot curve, having this final run up. Now it was capable to do this run up because you see, even though we're priced here playing right along our dot curve, again, here's our collapsing V channel. Price above the V channel is a very, very dangerous place. You just don't want to be here. You can work in V channel, you can come sideways. You notice it's just long sideways trade since the 90s, popping back into our V channel, and now our V channel collapsing. So this is a collapse move going out into the 2030s here. Forget this idea of higher markets and markets to the moon. It simply is not going to happen. Because remember, you can print all the money you want, but it's not going to create velocity. And you notice, like in this model, you see how now we look at there's the SPX actually popping out at the top of the model. You can see it right there. Take a look at it, popping out. As velocity is starting to drain, we've got a big drain ongoing in trend, and all this now is getting ready to plunge for the first move lower. So in the pattern model, we are simply already at the top. Now let's push forward here. Pardon for the beeping in the background. That is members beeping me over on our Discord site. We've had some discussions going on over there today, and that's what you're going to hear as we work on this. I thought it was kind of interesting. Let's pop in here. We're looking at GME, and you notice how GME had a 25% down candle last week into this drop, which was programmed. And I told everybody, you know, some of my members, they wanted to trade GME, and I said, leave it alone. You ever think, hey, they're going to be start buying Bitcoin. You know, this could be the next master. I said, MSTR. I said, are you out of your mind? You don't buy GME at the top of the dot curve. And you notice when it was cheap back here in 2024, it popped up here, had this huge rally back up into the V channel, hit the dot curve, and then worked back down. I said, no, you do not buy GME at the dot curve. And sure enough, we had a 25% down day. There's still room for it to go lower. It's going to hold right now. You notice how price stopped right here, right on that dark line, which is our gate. And price can hold there right on the gate. You see how it's holding here? Unless this signal goes back to negative, and then we're going to drop lower here. So we've got a pricing band here between the dot curve and the pink mock below, but I expect this to work itself lower now. This is going out into 2026. There's no trade in GME, and if you tried to play that, you would have got smashed. Now let's just talk about gold really quick, because there was a time when Alan Greenspan talked about gold, and he said gold acts as a currency at times, and gold acts as a commodity at times, and sometimes it can act as both. And if we look at gold and silver in a dollar-based model, if we model it on the dollar-based model, to me, it's trading more as a currency right now. So gold is acting as a currency into the money printing inflation, but I think it's way overpriced here now. You could see in our dollar-based gold and silver model how well this has read both silver. You see silver here in the silvery bands here, and you notice back here it was a bit higher than gold back here in the early 2010-2011 period. And you notice our indicator, which is our dollar-based indicator here in blue, has now topped out on the dot curve. So we're done with this move. I do not expect silver nor gold to go any higher. And now you can see as the dot curve starts to come down, we're still going to need to see this reversal in trend here, but I do not see price of gold and silver going much higher now. We've topped out here on the dollar-based signal. It's not just going to absolutely collapse, of course, but we are way overpriced here on gold. We're fairly priced here on silver, but it's not higher. So based on the dollar model for gold and silver, it is over. It's just not going to get much higher. Now look at this NDX tail risk model, and you can see how nicely going back into the lows in 2022, this is traded. Now you notice here we had this original sell-off here. We've had a little bit of a rally come back up, and I'm saying right now we're pricing NDX below 61.94 into the next move lower. This is going to be a big move lower. So we're looking at price based on this finishing wedge here. You see this is what's called a finishing wedge here on the tail risk model. I think that we could do 6194, maybe lower here on NDX. We'll see how it sets up, because we notice the red, our tail risk, has followed very, very closely to the price of the NDX. And the finishing channel is below this price. Now the finishing channel could put the NDX down here even lower. So we're going to have to see how that sets up. We're going to have to look at that. So we're going to wait on that, okay? I just want to see how that sets up. Now let's go to a few things here. Let's look at Bitcoin. You know, Bitcoin, I put this up on Twitter, but I want to just talk to you about this. You notice this short, first of all, let's go to the big term model on Bitcoin, because these two models I think are really, really interesting. Let's see, I put that over here in the crypto miners. Let's jump over here. Let's go to the crypto miners. This is where I put these two models. Okay, you can see that we completed an A, and then a B, and then a C, and then a D, and now we've completed an E. But what's so interesting here is you'll notice that we completed this based on the price. So the candlestick hit the top of the channel, top of the channel, and top of the channel, and now notice that the signal was a bit late after this E channel hit. We've now got the signal turned over and rolled down. You see it right there? It rolled down at the top here, and it rolled down at the top here. Now what that would mean in this rising A, B, C, D, E channel is that price will now have to break below this channel line, which is pricing us on GBTC below 1250. And the dot curve is at 5. Now everyone's going to call me crazy, but we do, based on a rule, have to break this lower channel in the next couple of years. So we're going to see. I mean, if you're in Bitcoin up here and you're thinking you want to hold, please do yourself a favor and get out of Dodge right now. Sell all of your Bitcoin, all. And you can see here in the shorter model, you notice here another perfect looking A, B, C, D, E pattern. Perfect A, perfect C, perfect E. Price stopped right on the third hit on the channel. The gate below holds here at 93,470. If the gate breaks out, you notice how deep the V here is. Price is going to have to re-enter the V down here into this year. So that puts us below 76,000 on BTC USD, and we could get as low as the mock curve here down around 49,50,000. We're looking at a 50% loss here in the Bitcoin space. So if you own crypto, please don't listen to all the talking heads out there. Do yourself a favor and get out of that space. Now let's just not waste a lot of time here, because let's see what else here I was talking to my members about. Let's look at this deflation model. You can see now that our deflation model is fully topped out. Look at it, fully topped out. Let's pull over on that here. You can see now that the velocity is collapsing. You see the blue coming out here. You can see the trend is collapsing. Inflation is topped. So inflation is topped right here. You notice right on the top inflation, we got this first sell-off, and we've had this B wave bounce back up. The B wave was an absolute beast, and that had to happen because actually it's the finance that was kind of driving this right shoulder. But at the same time, we needed this right shoulder in a lot of the technical models, and it is now complete. But you notice once the velocity rolls over here, you see right here the velocity rolling over. Here was our 2022 corrective move. You see here with the trend rolling over, here's our 2020 move, and here's our 2019 move. So inflation is done. It's done, it's done, it's ready to go, and it's ready to head lower. So we're seeing that in the pattern top. We're seeing that here in the deflation model, and we're seeing that across a lot of the data. Now here's one other model I want to show you till I get into this final model I want to share with you around finance that I feel is the most key here. Let's take a look at this. This is what I call the controller. Now the controller is a bond-based indicator, and the controller are these red dots you see right here. So we're modeling the controller, and you notice how nicely it tracks to the SPX. Now notice our controller now, we're seeing liquidity come out here, but price is still up here. Now what's interesting, you notice here in the controller model, nice little head and shoulder formation here in the red, but notice this really nice head and shoulder formation here in the SPX. And now here's our right shoulder here at 6059, the head at 6147, the left shoulder at 6099. We've got a beautiful looking head and shoulders topping pattern again here. The B wave is complete and we're ready to head lower. I think it's absolutely done there. Absolutely. So you can see it here in the bigger model. This is the same thing. This is the controller model. Again, the same idea in that model I showed you earlier. We have now broken out above the V channel. We can't do that. V channel was all the way down here. Right here we broke out, which was early 2024. And we've been doing just this massive distribution top here. And again, why do I call it a distribution top? Well, if we go to this model right here, we can see the retail stock buying to the institutional positioning starting in June 2024. The institutions have been selling into the rally while the retail has been buying the institutional selling. So they have just been holding this market up while they can offload as much stock as they can into this significant top. And again, I want to remind you that we had to get this top right here. So you notice we only just got to this top here before we rolled over. Now this is that triple top model I talked to you about in the 300-year cycle. Our first top in 1929, our second top in the year 2000, and now we finally hit the black line trend from the pink line hit below. We're all the way up top. We've got our third hit, and the 300-year cycle has got a 100-year top ongoing here. Now I've talked to you about that, and I think that's significantly important. So let's just go now into the final thing. I've got a layout of where I think price is going to go. I've talked to my members about that. Now let's talk quickly here. I put this up on Twitter as well. They have simply blown out the business cycle. Now the way the business cycle works is you can see a traditional healthy business cycle back here. You notice we have the initial run up from 1995 coming up here into the 2000 top, and then some energy coming out of it, some debt being expunged, some people taking off leverage. Then we had another rally back up to this curve. You see this beautiful looking topping curve. Here's our next rally up to the curve, and then we had another corrective move, and then we finally broke out the other side, and we begin a new business cycle. So what happens is you have this period of expansion, then you have a topping pattern, and then you have this pattern of where all the debt goes out, all the companies that can't make it, they go out of business, and it resets the economy. And that is how a business cycle is supposed to work. Now, what they did in this business cycle, it wanted to start correcting here in 2016. And then you can see as it started to blow out here, it wanted to start coming down, but they kept doing deficit spending, right? And in 2010 here, they just opened up the spigot, 40 odd, who knows how many trillion later. Here we are in the biggest bubble in history. And here is where we should be pricing. So in other words, what should have happened is this should have come up, and then the market should have started to come down, gone back up, come down and gone back up. And actually price would probably be down around here right now and not up here. And the business cycle would have been reset. All this debt would have been wiped out. We wouldn't have had to have done all this printing, and we now have a absolutely beautiful and healthy economy, and actually at lows in the stock market. Instead, we have got what is the biggest bubble ever, and this is going to be nothing but pain into the next decade. There's simply no free rides, and please understand that there are no free rides. Now let's finish here with the finance model. Now, it's not just finance when we take a look at the XLK, or excuse me, that's technology, the XLF, but we look at a global model as well. So here is our global finance model right here. And you can see the red is the XLF component, and you notice we got a very nice head and shoulders formation here. Here's the left shoulder, here's the head, and now we've got a lower right shoulder. So we've got a very large completed head and shoulders formation in the XLF. We did get a new high here in the global model, and I'm going to show you why we had to have that higher high. But you look at the size of this beast. Here's your last high in the global finance. Here's your 2020 high, and you see how liquidity of the velocity of liquidity was coming out, and then we just collapsed, and then they printed. And then here was our other high where we were only here, and then another high going back here pre-2016. This is an absolute beast in global finance. This is just not going to end pretty. And here's our global finance model. It is all the way at the top here. You notice that stick right there, all the way up hitting the Mach curve. We did get up to the Mach curve here back in 2018, but this has just got nowhere to go. We're already seeing the trend starting to break, and all of this getting ready to go lower. And you see once the trend starts breaking, 2022, here's 2020, here's this corrective move back here. Now in the stock market it didn't do much, but notice the big global financial correction from 2018 into 2019. So this is just a beast. Now here is where it jumps off the page, and I want to show you this, and we're going to finish off here. You notice right here we have topped out. We topped out here right here before June 9th. So right at the beginning of June here, we had the global finance model top out. You see the turn in the signal here? Well, you want to know why that's so significant? Right here. That is your turn on a double signal top. You see it? Right there. Double signal top and rolled over. Now, what is so incredible about this? Global finance is now higher than the high we had before the financial blow up in 2007. But what's so incredible is look at this double signal top. One signal was the 2009 low, and the second signal was the 2003 low. So off of that low, and you notice the orange signal here coming down into the corrective move of the years 2000, 2001, and then the rally back up, and then the next corrective move back down. Look at the signal turn right on the corrective top at 2007 when the financial crisis began, and hitting our low in 2009. So notice you had the red signal bottoming with the 2003 low and the gold signal bottoming with the 2009 low, and both of them have now come up to a signal focus right here as of the week just before June 9th. We have a major top completed in global finance. Prepare. It is done. It is going to get ugly. I don't know what they have planned. I find it so interesting that right at that top, in they go, finally into Iran, and start another war. Have a great weekend. Get a hold of me again at destinytrading@gmail.com. We'll get back to regular posting here in the weeks ahead. And again, just needed to take a vacation break, and I've just been extremely busy over there, as you can see, sharing models and having chats and participating with my members on our Discord site. Thanks for tuning in, and get a hold of me. Join. It's a great community, and I guarantee you in the year ahead, you're going to be very thankful you're part of that community. Talk to you soon. Glenn out.